So it's my pleasure to chair this session, and thank you, Kerry, for providing this opportunity. And I thought I would like to take your mind a little bit away from what you have been hearing about investing in both either junior or exploratory company in Australia or in Canada, to bring you a step away from what you usually do. Mining industry to me is you dig a hole in the ground, you try to get something out of it, and then you sell in the market and you thought that your job is finished. But exactly, this is not something that is so simple. Someone has to move the gold from your hand into the end user. And the end user probably including the central bank, the retail investor who buy bars and corn from Perth Mint, a jewelry lover, and also industrial use. So from the time that leaves your hand to where the end user, it takes a long journey. My career in the last 25 years was to help to move this thing from your end to the other end in a smooth way. And I was working for the World Gold Council before, for 23 years before I retired, and took up this job to promote Singapore as a regional hub to connect people. My job is to connect the investors, the user from around the world to the Singapore, to the Southeast Asia player. Likewise, the player in Southeast Asia, which are the ASEAN country, 10 ASEAN countries, in terms of gold, has different level of regulations. Some are open economy like Singapore, some are very restricted like Myanmar. But over the last 20 years, I have personally seen the market opening up, and they are actually absorbing more of your productions. So I'd like to spend some time taking you through a few slides and let you read about the figures to give an appreciation of where the metal is gone. The first slide I'd like to show you is this one. People talk about China, talk about India very often, and of course they are big. China consumed nearly 1,000 tons of gold. Certain year in a peak, it surpassed 1,000, but last year it's only 900 something. And of course, India, second biggest market, and so this later on will give you an update. But very often we miss this ASEAN market, which is a grouping of ASEAN countries together, the 10 countries together. It is about 300 tons of gold. It's exactly your production. If we hear the number correctly this morning, it was 303 tons last year in Australia, and it just fit nicely into Southeast Asia. So altogether, these three regions account for about 60% of the global mining productions. Bear in mind that every year we have recycled gold, which is about 1,000 tons, plus the mine production is close to 3,300 tons, and plus the recycling, it probably will be a 4,000 something ton market. So it all then finds its way into the consumer, the user, and Asia account for 60% of it. But from your hand to these people, it has to gone through many hands. So my job previously at the World Gold Council and currently in Singapore Bullion Market Association is to work with the intermediate in between the banks, the refineries, the jewelry manufacturer, and the bullion houses to try to find ways to put this into their hand in a smooth manner. And if we actually look at a bigger, if I break it down into last couple of years, it is like this. I mean, the trend is follow the global trend. The highest that we have seen, it was in 2013, where, I mean, the global market also peaked, and then it tapered off. But ASEAN still account for almost 300 tons of gold, and these are the breakdown: the investment, the jewelry fabrication, and as well as industrial use. If I have to further look at the role of Singapore in this scheme of things, is how Singapore play in the ASEAN market. The next chart shows you the last few years flow from Singapore. You see that every year there are about 200 tons of gold flowing into Singapore, and then we get a slightly higher export. This as a result of Singapore also is an aggregator for recycled gold. In the region, the scrap gold will find its way into Singapore because Singapore has developed a world-class refinery called Metro, which was one of the initiatives why Singapore subject themselves to try to play the role of a regional center in ASEAN. The next chart will show you later on why I say Singapore is taking up this role. Singapore, 30 years ago, when the surrounding country is a very restricted market, Singapore being the only open economy in Southeast Asia, is the so-called transshipment point for physical gold. But 20 years ago, Singapore government imposed GST, tax, on all gold products. And at that time, 1993, I still remember, that killed the market. This gives us a lesson that if gold has to have free movement, it has to be moving without tax through borders. If there is a tax, there is parallel market, and there will be distortion in the market. And Singapore, 20 years ago, was a transshipment for the whole region because I can still remember in 1993-94, there were 400 tons of gold coming through Singapore. Basically, Singapore is a transshipment to Malaysia, to Indonesia, to Thailand market. But as soon as the government slapped the GST on gold, this all disappeared. Then the market went into bear market for almost 10 years until year 2000, that the super commodity cycle around the world come back again. Singapore government in 2010 consult the industry, say, have we missed the boat? Have we missed the boat that we didn't enjoy the commodity super cycle? Have we missed the boat? What can we do to regain Singapore as a gold hub? At that time, I was working with the World Gold Council. We told them that this is basically impossible to regain the status because you impose tax. Singapore is not a natural center for gold movement, so it's basically not possible. But then the officer at that time say, what can we do if we want to bring it back? We named three things. One, we move the tax. Secondly, because Singapore is not a natural center, it's not a raw material passing through place. If you are able to attract a world-class refinery here, you may be able to attract scrap to come through Singapore. And third, you don't have an active trading contract or trading mechanism in the market to attract the flow of gold. So they put up the proposal to the Ministry of Finance, and after a few months, the Ministry of Finance say, okay, let's do it. So in 2012, they removed the GST on investment-grade gold. They go around the world, attracted Metro to open a refinery in Singapore, and they work with the Singapore Exchange to create a spot trading contract. And the other thing which they have encouraged us to do is use the SBMA as a continual platform to attract people to come to Singapore, to connect people in Singapore, through Singapore, with the ASEAN market, which a lot of us, after seeing the potential in China, in India, started to look into where else is the next country potential for the gold market. And a lot of them look into Southeast Asia. Unfortunately, the Southeast Asian market is so diverse and language, culture is so different that a lot of global players find it difficult to get into the Southeast Asian market. So the SBMA from 3 years ago established and professionalized ourselves, and now we are creating platform, creating annual conference events to connect the global player with the ASEAN player. And every June we organize a platform like this in Singapore, and you are welcome to check our website and you will see more detail on it. But I just mentioned why Singapore can be a conduit for all this activity. The next chart will show you. If I show you the import and VAT status in these 10 ASEAN countries, only Singapore stands out because it's zero rating on basically investment bar, and VAT only put on jewelry. And for the rest of the ASEAN market, there are different levels of opening. You might heard about that Thailand is another very open market. Another big potential is Vietnam market. But these all have a little bit of market regulation which prevent open market access. But being in Southeast Asia, you also understand that there are a lot of parallel activity in the market. And there are also parallel activity in relation to the subcontinent through Singapore. So Singapore, for that matter, that substantially the previous chart that I'm talking about, the huge amount of gold coming through Singapore, even though Singapore domestic consumption is tiny, less than 10 tons of gold, and these are the physical flow of gold through Singapore. So with that, I'd like to end my part. I mean, if I have half an hour or 45 minutes, I can elaborate a lot of the stuff that I was talking about. But in the interest of time, I better ask my colleague, Sudhish, to also give us a short update on Indian market. Sudhish is the director of the Indian Gold Policy Center, and they have been helping the government in drafting the current gold policy in India, and now is in consultation, and would like him to give you a little bit more update on this.